to help us make sense of how the week has been like when it comes to the performance of various companies as well as various stocks in the stock markets. Duncan, good afternoon once again. If you can hear me, we can just kick off the conversation. What are your thoughts around how we've seen KQ performing? Before we had the technical hitch, you were actually telling us a bit more about is KQ a going concern? Are they likely to recover from their loss-making streak, really?
Hello, thank you so much for the interview. KQ, as we said earlier, having both internal and external issues, seeing a lot of challenges for them to in managing the direct and operational growth, which is really hurting the bottom line. However, in terms of the top line, for the number of passengers able to carry, that's still coming down low. The challenges which are coming from tourism, no number of tourists coming into the country, still affecting them. However, as a going concern, that's where investors come in. Having a negative shareholder's equity position is really not an attractive space where.
And we hope that now that they have onboarded McKinsey, McKinsey could come in and try and correct the situation. McKinsey have done a wonderful job. We've seen what they've turned around KCB, and they have already working with Cooperative Bank. And we just hope that the same mojo is what they'll go in to turn around Kenya Airways and try to move it towards a profit-making entity. Ideally, it's a national brand. If you look at where it's positioned, it's really aimed at boosting Kenya, even towards boosting tourism in Kenya. Therefore, we expect a whole turnaround strategy to be able to move it better, to a much better place.
Well, Duncan, the other question, of course, is we've seen, you've actually pointed that they can make a turnaround. Looking at still the same company, Kenya Airways, they have a very high debt equity ratio, and it's actually in the ranks of about 30 billion shillings. What do you make of this, Duncan?
Yeah, we might have to take a step back and look at where normally do airlines operate from. Well, as much as the debt levels are high, ideally an airline company is always a high debt company. However, what's of concern to Kenya Airways is with the level of debt they have, are they able now to be able to generate more assets from the money they have received, be it from loans and strategic partners injecting capital into it? Well, that's what we are going to expect coming in from the new turnaround strategy, where they're able to sweat out the assets they have to be able to generate more income from the same. However, we would also expect maybe later on some little bit of conversion of whatever debt they have into equity, because at the position where they are and their revenues are not looking good, there's slowdown in revenue, and tourism really has not fully recovered. They might continue paying high on the interest rates there from the same loans. We might also want to look at it from the other side of how the loans are denominated. Most of the loans are foreign currency denominated, so they are also getting exposed to foreign exchange losses. When you look at the performance of the shilling year to date, it's clear an indicator that Kenya Airways will continue registering more forex losses. But as we look into 2016 all the way to 2017, and we look at a much more stable environment, at least they'll be able now to reduce that section of costs from their books.
Many thanks, Duncan. Looking at the equity position, as I asked you earlier, they moved from 8, now we're talking about close to 33 billion shillings. Is this sustainable when we look at some of their measures when it comes to turning this particular situation around?
Well, the position where they are in right now on a negative equity position is really not commendable at all. And we expect some bit of a direction. We could see maybe regulators coming in and giving their guidance on this. However, from a shareholder perspective, if you are a shareholder holding on to Kenya Airways stock, you are really a worried lot. So ideally the turnaround strategy should be the ultimate call on which Kenya Airways is working on, and just to rethink the overall Project Mawingu strategy, which they went to buy the new Dreamliners together with the Embraers. So they might have to relook at them and see where is it that it's not functioning, and where we're looking at it even as Cyton ourselves. Ideally, if they're able to manage their fleets in terms of fleet ownership costs, now that they are owning the planes, they might have to rework the whole strategy around that. Leasing planes is an option for them, which they have always had all along, even before going into Project Mawingu. And we just hope that now that the restructuring process is coming, we might expect them not to take in new planes into their books as their own assets, but rather try and lease them and try and cut overall the fleet ownership costs associated with that.
Interesting that you bring that out, Duncan. Let's shift gears a bit and look at some of the other stocks. We've seen Home Africa being among the biggest movers this week, and they'd actually posted a loss when we were focusing on the results a while back. What are your thoughts around their recent position in the stock markets, really?
What I can make of Home Africa, ideally, is the normal trading momentum which is attracted in the last 1 week. However, when we look back and look at their strategy in terms of property, with the current interest rate environment, it's really been a shaky environment, a shaky place for them. However, from an overall look of it, who are the property developers in Kenya, what they are doing. Ideally, how you execute your property strategy is what really matters. So with the launch of the recent property plan they did with MIGA, we hope that eventually they'll get their act right in terms of getting it well funded, getting the right investors to inject capital into future projects, and also being able just to try and tie in the market dynamics in terms of pricing, in terms of investor demand into their overall models and overall strategy. However, now looking at it, even where we are at Cyton ourselves, we are a property developer, and these are similar environment where we come across together with Home Africa. But ideally, a strategy that we are taking ourselves is the one which is giving us a lead in it, which we're hoping that all the other property developers will be able to follow in suit and be able to take advantage of the market dynamics. Despite high interest rate environments, we might want to look at it. Would you really be dependent on the money that's coming from the market in terms of loans?
Yes.
Not really. You might have to partner with global players injecting capital into it, who are hungry for yield, but at the same time be able to give you a much more affordable cash and much more strategy in terms of the expertise coming in.
Interesting, Duncan. The other issue, of course, you've raised is about the interest rates. We've seen the shilling not falling to the levels that some analysts had actually predicted. The shilling is still performing not so good against the dollar. You're talking about 102.25. Last few weeks we saw the shilling actually appreciating a bit, and it was trading at 101. What are your thoughts on this moving into the next coming weeks, really?
Well, what I'd make of it is more of a short-term movement. What we see a bit of strengthening in the last couple of weeks would be associated mostly with the flows which could be associated towards the money that came in through the funding that the government received. However, from an overall look of it, we need to understand why is the shilling where it is fundamentally. Our import-export differences, that which forms our current account deficit, it's still at a worrying place. And you look at tourism, our numbers are still low, as much as we've seen quite an increase in the last couple of months. So ideally, the shilling is on a bedrock of poor fundamentals, and it might take a deviance from what the overall expectations have been from the analysts, but we're still wary of the fundamentals behind the shilling. However, what I would expect now coming into the December holiday and going into January next year, would expect some bit of firming up. Diaspora remittances, we've seen them coming in strong, and a lot of repatriation of cash back to the economy. And these are some of the things which will be able to inject a little bit extra dollars into the market, at least to be able to support the shilling.
And looking at the global markets as well, Duncan, of course, what happens on the global front has an impact on Kenya as well as the continent at large. There was a lot of expectations coming in from the US markets of a possible Fed rate hike. Do you feel this will impact on the shilling's performance as well as other stocks on the Nairobi Securities Exchange, really?
Well, yes, expectation is that the Fed will most likely raise rates in December, and this has an impact on the shilling. We could see a further depreciation of the shilling around it. However, it's also of note to mention that the market seems to be already pricing in the dynamics around a rate hike. So as we expect a hike from the Fed in the coming weeks, would expect far much depreciation, but not so much as it already gets priced in the market currently. It's an expectation that has been there in the last 2 quarters. So investors, as much as we are yearning to, or rather we're expecting to see the rate hike coming, the dynamics of that has already been priced into the market. However, the other question would be now, how do we look at it in terms of the post-effect of the pricing into our, post-effect of the rise in Fed rates into our equity market? We could see a lot of also foreign activity in terms of repatriation of cash back to the US market, and just considered much of a safer zone compared to where we are. But
maybe Duncan,
we wouldn't see much of a bigger impact coming from that, because if you look at the emerging markets, they've been hit so much within the commodity front, since they are very much commodity dependent. So the yield seekers are basically trying to stick towards the frontier markets. And Kenya being a frontier market, you'll see a lot of interest still by foreign investors, who are majorly the main drivers of the market, especially the equities market. So it's a more of a win-win situation for both the Kenyan market and towards the developed markets.
And before I let you go, Duncan, you mentioned that repatriating of cash back to these foreign markets. Well, what is the likely impact of this, bearing in mind that the NSE here in Kenya witnessed some degree of capital flight, especially when we attempted to reintroduce the capital gains tax on property?
So Abi, when you look at the equities market, really, the main players within the equities market are foreigners, who account for between 60 to 70% of the turnover. Now, these are the same investors who have come into the frontier market to be able to get an exposure where yields are very much attractive. If you compare the sub-Saharan African indices to the developed market indices, we still have a premium on the yield we are able to generate on an annual return. Thereby, as much as the rate hike in the US could show some bit of attractiveness, we don't, where we sit as analysts, we don't see a lot of attractiveness in the yields compared to the local market. That's Kenya now. Because when you price in the issue of risk, when you're able to price in volatility within the frontier market, we still rank high. We still offer a much better yield and a much more attractive yield from the equity asset class.
Interesting insights regarding the performance of the stock markets as well as the money markets. Many thanks there, David Lumamu from Cyton, for giving us that in-depth analysis regarding that issue. Of course, we'll be having you also next week to help us make sense of how the markets have performed. Well, as you know, each Friday we set aside time to discuss some of the key projects in the country. And on this week's edition of The Transformers, we take a look at what's happening with Centum. Well, Kenya is witnessing an unprecedented boom in shopping malls, buoyed by a growing middle class and infrastructure improvements. Developers have spared no efforts dotting the city malls. On this week's episode of Transformers, we focus on Centum Investments' flagship project that will be a key landmark in Eastern Africa. Well, I engaged with the firm's CEO, James Moria, on the magnitude of the project, as well as what will be the impact on Kenya's economy. Increased infrastructure spending, Kenya is fast climbing up the ladder as one of the destinations investors are betting big on. The commissioning of new roads as well as ongoing plans to upgrade the current road infrastructure is signaling a country on the move.
We're ambitious people, and you see, unless you have a target,